This video is an impassioned plea for you to stop believing influencers that Bitcoin behaves like stocks or any other asset class, or there really is any comparison between the two, because Bitcoin is not the same as an equity position, and you really need to stop believing the influencers, okay? For those of you new to the channel, I'm Casey Marks. I'm the founder of Crown Haven. I'm the founder of Bull Baron. I'm the founder of Pinecone. I'm the founder of Annuity Lock. I'm here to help you beat the financial system. I have built 4 successful multi-million-dollar companies. I have mentored literally thousands of advisors nationwide across multiple lines of business. Life, health, wealth, you name it. I know the industry is a fundamentally flawed sales system, and my aim is to align the fragmented system so that it helps real families. My biggest aim is to tell the truth. Because of this, I am booked nationally to speak in front of groups of people, to teach them how to provide better guidance to their client base. I have personally spent over 60,000 hours counseling clients of all shapes and sizes through all of their life events, good life events, bad life events, their own personal black swan events in the market. I've designed the systems that hold up the technological infrastructure for the wholesale marketplace and a lot of these different subsets of our industry. I have trademarked planning processes that get distributed nationally. I've hosted my own television programs. I hosted a radio show for 13 years. I've written multiple books. I've been recognized by all of the media outlets that you would recognize. I've maintained a very, very low profile while I did all of this. You didn't see me all over social media. And the reason is because I'm not after followers. I've always been after building things that matter to help people like my family, because this all started out while I watched my widowed mother lose my family's entire life savings to a system built to deceive her. And here's a secret. The system isn't broken, it was built this way. So I decided I had 2 choices. 1, be a contrarian, be a revolutionary, fight the system. 2, fight it from within. I've been fighting it from within. My new book, Inheritance, Blowing the Lid Off of Big Finance, comes out June 2026. I suggest you pick up a copy. It will change the trajectory of your family's life. Each one of these videos is going to go over one particular lie that I see with the knowledge that I have after sitting down with billionaires, sharing A5 Wagyu while they receive phone calls from the President of the United States during major crises. And then they laugh about how it's all a fugazi. I'm just so sick and tired of the BS. And I'm here to tell you the truth, because you deserve it. What do the influencers want you to believe? What do these people with these pump and dump schemes want you to believe? They want you to believe that cryptocurrency is an asset class just like everything else. You're gonna get rich. That's the clickbait. The truth is this: an altcoin, even Bitcoin, it's not a replacement for equities, okay? Bitcoin is an entirely different ballgame. It's a nascent industry. It's only been around since 2009. If you treat Bitcoin with the same rules that you would play the game of equity investing, as an example, you're gonna lose. If there's one thing I've learned in 15 years of working with families of all different shapes and stripes, walking the institutional level trading floors, meeting with the wholesalers, meeting with the billionaires who own the frickin' companies, and I'm talking the big companies, it's this: you don't get wealthy believing narratives. You get wealthy understanding incentives behind those narratives and then making informed decisions on good judgment. Never emotionally. Never out of greed, never out of fear, never out of comparison, which is a cancer of the mind. Never because you saw some other kid do it with a rented Lamborghini behind him. But here's how this lie happened. It wasn't economics, it wasn't math, it wasn't macroeconomically forced upon us, it wasn't monetary policy, it was marketing, okay? This is marketing. And I'm speaking particularly about the influencers here. They discovered that volatility gets eyeballs, just like the media did a very long time ago. So anytime the price of something jumps up and down, more eyeballs, they're gonna scream from the rooftops about it. Volatility is engagement. Engagement is money. Money is perceived influence. If I were standing in front of the cars that I own right now, you would think I was cooler. Some of you would, at least. Or my house, or any of that stuff. None of that shit matters, by the way. But everybody thinks it does. Just like everybody thinks you have to tear somebody down in order to get up. When some of the kindest people in the world that I've ever met are the wealthiest people because they've already realized that money doesn't make them happy. But I'm here to talk to you about the not so kind people that are super wealthy that are doing some not so great things. But as a result of these influencers discovering this, that volatility creates engagement, that engagement creates money, and that money ultimately increases influence and clicks and eyeballs and revenue, Bitcoin and other alternative cryptocurrencies became a religion. And just like any religion, you get fanatics, okay? A fanatical adherence to anything is not a plan. It is either hope-based or fear-based. Here's the truth. This is how this actually works, okay? Number one, any cryptocurrency is speculation, Bitcoin included. Let's break it down. Why is Bitcoin valuable? And by the way, in order to keep my thoughts linear, yes, I have something I'm reading from. I have prepared notes. Two, I'm going to give the pro argument on Bitcoin too, because believe it or not, I am kind of a proponent of it. I just don't think it's the total plan design, which I don't think any rational human being would. But Bitcoin is speculation, okay? Where does its value come from? Other human beings' belief in it. Why do they have that belief in it? Well, scarcity for one, 21 million coins. Liquidity. When there's a lot of money available in the market, it tends to go up in value. That's basically where Bitcoin gets its value from: belief, scarcity, and liquidity. Stocks, on the other hand, equity investments, are based on cash flow, earnings, innovation. So you've got an asset class on one hand, Bitcoin, that is either hope or fear-based. It's, if I buy this, I'm going to get rich, or if I don't buy this and the system collapses, I'm in big trouble. Meanwhile, you have thousands and thousands and thousands of companies out there that are actually innovating, that if they perform well, their earnings go up, that if they manage their internal finances properly, their cash flow improves. And you can own a slice of that. It's a real business. It's not based on hope or fear. And as a matter of fact, in all major stock market downturns, you can look back, you can look to the Great Depression, you can look at the financial crisis of 08, 09, you can look at 2020. Not every single stock dropped. There are some companies that actually outperformed because they were still valuable, or at very least did not drop as much. Whereas if you were to look at Bitcoin, in every major market collapse, it has dropped harder. Why? Because its beta is like 2.74. It's going to go twice as fast as the market. Okay. In a nutshell, Bitcoin is something that people either hope happens, I hope I get rich, or they're afraid of what will happen, so they hold it. Stocks are what is actually happening. Bitcoin depends on a lot of liquidity, whereas stocks depend on profitability. Here's the cycle. If the Fed prints money, cryptocurrency goes nuts. It explodes. More fiat currency able to be pumped into cryptocurrency, and cryptocurrency goes up. If the Fed tightens, cryptocurrency goes down. This is not revelatory. You've seen this unfold, and if you haven't seen it unfold, look at any major crypto influencer and look at what they talk about. Ooh, there's going to be some QE coming. Get ready for the pump. Meanwhile, stocks are compounding your wealth. Over time, stocks are compounding your wealth. What cycle does Bitcoin follow? It explodes when there's great liquidity. Then it collapses when the liquidity dries up. Then it repeats that cycle. And because of something entirely different, which I'll touch on in a second here, there are still institutional people that believe in it for good reason. But that's the cycle. And during this cycle of volatility, many investors mismanage their funds. Why? Because they don't have an infinite amount of time to wait out the volatility, and they don't understand what's happening, and they put way too much of their risk budget in this single asset. So volatility really isn't even the enemy here. Misunderstanding the core thesis of the investment is, and mismanaging your emotions during that period of time is, because people weren't taught how this system works. So how do you prevent all this from happening to you? You use Bitcoin as a sleeve, not as a strategy. It should be 5 to 10% of your portfolio max, unless you are extremely wealthy. And by extremely wealthy, I mean like you've got $10 million or more liquid, and like you don't have a lot of high expense, lifestyle habits, and you're planning on taking $5 million and throwing it into Bitcoin because you think it's the future. So the other $5 million you're planning on taking $150,000 a year out of for the rest of your life. Because inflation's gonna still happen, which I've got another video on. The Fed's gonna keep printing money, which is inflation, debasing the value of your currency, which by the way is the entire one of the entire narratives behind Bitcoin in the first place. So it's not bad to be balanced, but dude, if you're gonna put more than 10% of your money into Bitcoin, you better have money in other places, because it can really implode on you. So for that reason, stocks should be your wealth engine during your accumulation phase, and Bitcoin should be your optionality engine, because it's certainly not a retirement plan. It's speculative. It's powerful, it's revolutionary, but it's not income generating, unless you introduce more volatility or leverage, which of course increases your drawdown risks. You gotta know your own psychology. People have what's called a natural and an adaptive state, okay? A natural state is somebody comes into my office, they think they're super fucking cool, bud. Just super cool. And they say, oh, you know what? I got a couple $1 million. If a 60% drawdown hit me, it wouldn't matter. This is risk tolerance, by the way, not risk capacity, because risk capacity, that person could never handle a 60% drawdown based on the functional utility of their money. But let's say they could. Their tolerance would tell them in their natural state after they just had, you know, like a 12 count at Chick-fil-A and stopped by the local swig on their way here. Oh yeah, no problem. Their adaptive state is when the markets just dropped and they lost 60% of their money because they had it all in, you know, biotech and, you know, some small cap, this or that, and crypto, and that's called their adaptive state. And Mike Tyson famously said, everybody's got a plan until you get punched in the mouth. Well, you just got punched in the mouth. How's it feel? If you even have the inkling that you'd go home that night after finding that out, and you'd treat your wife differently, you'd treat your children differently, you'd feel like the world was closing in on you a little bit because you didn't have enough liquidity elsewhere, then you shouldn't have that much in Bitcoin, period. Because what you're gonna do is you're gonna sell it at the wrong time just so you've got a little bit of control. Here's a checklist to make sure this doesn't happen to you. Bitcoin is speculation, stocks are ownership. Can stocks drop? Yes, if they're properly diversified against other hedges, tail convexities, managed futures, short and long-term duration bonds, alternatives, you name it. You can actually cap your drawdown risk under about 20% using just securities, but that's another point. Certainly not 60% with a properly diversified portfolio, whereas with crypto, FTX can collapse and you can lose 70%. So Bitcoin speculation, stocks are ownership. Bitcoin gives you optionality, and we're going to get to that next. But stocks over time will continue to compound. If you've got a good company with a good moat, with good earnings, good cash flow, something that people need, it will compound. Don't treat Bitcoin like a retirement plan. Please keep it to 5 to 10% of your overall portfolio allocation design, and that really depends on your net worth and the functional utility of your money. Keep stocks as the backbone of your wealth in the accumulation stage. Distribution's different. Distribution, you need income floors, you need liquidity for emergencies, then you've got a growth sleeve. And of that growth sleeve, then you've got equities, alternatives, maybe a little Bitcoin if you've got a little craziness. But for God's sakes, in the accumulation phase, keep equities as the accumulation sleeve. Understand that volatility is not the problem. Your misunderstanding of the volatility and or your reaction to the volatility is the problem. It's behavioral finance. Please, I started the video out this way. Do not follow the influencers, okay? Don't follow the influencers. They don't care if your freaking account value goes up, man. All they care about is if you click on their link. It's all they care about, okay? They didn't get their Lamborghini because they invested in Bitcoin at the right time. They got their Lamborghini because enough of you clicked on their link. Or they rented it to look cool, so more of you will click on their link. Structure is always better than hype. It's always better than hype. Now, that was the takedown of the asset class and the recalibration of how to look at this asset class. I'm going to get into why I still think this is an asset class to own. And I'm going to Steelman it. And then I'm going to implode the Steelman, which brings me back to my original point. But before I do that, subscribe, like, share this with somebody who is fanatical, okay? I'm here to provide truth. My book Inheritance lands June of 2026. I suggest you pick up a copy. It will change the entire trajectory of your life. I promise you that. I have nothing more to gain. I just want to keep helping people. But if you want truth, not hype, this is the channel. Now, everything I just said is if we're looking at Bitcoin as a traditional asset class, which in my opinion, we should do. But now let's approach it through the other lens, which a lot of people do. A sovereign store of wealth. Let's talk about the pros, let's talk about the cons. I'm gonna Steelman this sucker. It's not like I haven't thought about this. Managing hundreds and hundreds and hundreds and hundreds of millions of dollars in assets gets a guy to think about this, not to mention my own wealth. Then I'm going to get to the part that nobody wants to talk about out loud. The institutions, the people that are holding Bitcoin or any other digital currency because they have so much hope or so much fear or a combination of both. First, I'm going to make the Steelman case. And before I do that, I'm going to give a shout out to Zen. Okay, so Steelman case. This is the best possible argument you can make for Bitcoin. If you're gonna love Bitcoin, love it for the right reasons, not because some influencer told you to. Here's the strongest, most intellectually honest argument for Bitcoin. Number one, it is the only truly decentralized, non-sovereign digital asset in existence. There is no CEO, there are no government entities owning any piece of this. I mean, they own the asset, but they have no oversight over it. There's no board. There's no single point of failure here. This is absolutely historic. Humanity has never had a digital bearer asset that is not under state control. Ever. Historic. Number two, there's a fixed frickin' supply. It's classic economics, which means there's incorruptible monetary policy at work here. There's 21 million coins. Forever. That's it. There's no printing, there's no bailouts, there's no emergency liquidity. Bitcoin, if you wanted to view it this way, would be like the anti-Fed, okay? Which I have another video on. Three, it's portable and it's global. It is portable global wealth. You could carry $5 million of this across any border known to man in your head. Try that with gold. Try that with your real estate plot that you own in Omaha, Nebraska. Try that with your brokerage account. You can't do it. Number four, it's a hedge against authoritarianism. If you believe that governments are going to debase currency or abuse their powers or freeze your accounts or weaponize money against you, Bitcoin can be your exit ramp. Number five, it is censorship rather resistant. No government can stop a transaction. No institution can deny you access. Bitcoin allows anybody to become their own bank. That's powerful. Number six, the network effects of Bitcoin are very real. It's popular. Every cycle brings in more users, more adoption, more infrastructure, deeper liquidity pools. There is a very strong argument that Bitcoin could become the digital gold of the 21st century. Incredibly strong argument for that. But that's the best version of the Bitcoin argument, okay? And I'm not saying it's not powerful. But just like any Steelman argument, there's the inverse. There's always another way to look at things. I'm going to implode the argument I just made with truths that most people that are incentivized to keep this system going won't say. Here is the brutally honest retort that most radicals and fanatics will completely ignore. Is it decentralized? You betcha. Is it dependent on modern infrastructure? You betcha. Has anybody wondered what a frickin' miracle it is that the lights are on right now? They are. What happens if the internet goes down? What happens if the grid goes down? What happens in a cyber attack? What happens if the satellites that all the people say that will work for transactions, even if the internet goes down, go down? Bitcoin doesn't disappear. I mean, you've still got it, but your access to the asset class disappears. And if all of your money is there, poof, see ya. Guess you're bartering. Have fun. By the way, a fixed supply doesn't guarantee a stable value of any kind. What it does is it guarantees volatility. Has anybody ever asked the question, what happens when all of the coins are mined and they're all owned? Have we looked at who owns the majority of Bitcoin? Is it the average Joe? Digital scarcity is not the same as demand, folks. And oh, by the way, what does that say about world population? Like, okay, let's say the 21 million coins are all mined and they're all owned by individual people. What happens to everybody else? How do they barter, trade, buy, sell, if it truly becomes the future? I'll let you sit with that one for a second. Now, you can port it across borders, sure, if you memorized the key, but we both know that life isn't that way. Nobody wants to talk about this. People get hurt all the time. My stepfather suffered a hemorrhagic stroke. You think he would remember his key? Okay, so let's say you didn't memorize it, but you keep it around your neck like all the bros do. What if somebody rips that thing off of your neck in Tijuana? What if you lose your wallet? What if it gets hacked? By the way, this is pre-quantum. If you've been tracking crypto, you know that there are other protocols out there that exist that claim to be more secure, right? And everybody's concerned about quantum. And we're assuming that current cryptography can handle that. What happens if you panic? What happens if you mismanage the custody of it? You ever heard the story about the gentleman that threw his frickin' wallet away in a move? He wasn't even panicking. He just was moving or something. And then he wanted to pay some city or township or whatever a percentage of whatever was held in his wallet so he could search the dump. Your wealth is gone forever. Most families are not psychologically or technically prepared for this. And yes, there is a proper way to store Bitcoin, but we'll get to that in a second here because we call this a hedge against authoritarianism. But what happens when the authoritarian states outlaw it? All they have to do is shut down the mechanisms of exchange or censor the internet. You think they don't have that capability? That's naivety. China's already done it. Let's say they do it again. Let's say the EU does it. Let's say the US does it. Let's say they turn hostile to self-custody. Bitcoin becomes incredibly more difficult to use. It's not worthless, but it's certainly less practical. Now let's say you're one of those people who's holding it cold, and some government has said you can't hold it cold. I mean, they did it with gold. They've done this already. Look at history. Okay, so let's say they do that with Bitcoin and you're holding it cold and you're smart and you've got it in multiple geographic locations so that one regime can't take you down completely, and you bought it through an exchange who does this the right way, not through some like retail level exchange, and you did it in one tranche or two tranches and you got a lot of it, and oh fantastic, and there's only one transaction, and you set up an LLC and you put your money into the LLC and then you bought it. So there's only one transaction. So you've shadow recorded yourself. You've done all this stuff so that you are sovereign, man. Okay, how do you get it back online? What do you sell it into? Do you just decide you're going to live in a place that allows Bitcoin? And do you honestly think that they would not have some sort of agreement with the place you're from that would immediately identify you and tell the place you're from that you are holding one of the world's most scarce assets in this amount because it's traceable? Censorship resistance does not protect you from volatility either. Okay, so it can't be frozen, but you can lose 75% while you sleep. Let's say all your money is there. It moves twice as fast as the markets. Has anybody looked at current market valuations recently? This is November 17th, 2025. We are more than 2 standard deviations above a historically valued market. Real estate prices are super high. Gold is at near all-time highs. Everything's super high. Has a lot to do with monetary policy and macroeconomics, which I'm going to get to into another video. But okay, so let's say the stock market reverts to mean. There's a reversion, and the S&P is trading at 3,500. And that has a beta of 1. Bitcoin has a beta of like 2.7. How far do you think Bitcoin falls? That's not a store of wealth. It's a speculative asset class that you better be ready to ride out. The final one, becoming a digital gold requires global consensus. What do we know about global consensus? Well, number one, it's very hard to reach. Governments don't like competition. Central banks don't want a monetary rival. Institutions, banking institutions, they want control. They don't want you to have freedom. You think it's possible that these major institutions have gotten into the ETF game and all that because they recognize that people think they have the illusion of freedom right now when it comes to this particular asset class, but they know it's not going to be there later, but they're going to profit like hell off of it until you get there? All this to say, relying on Bitcoin as your sole salvation is not strategy. It's a bet against the entire global financial system staying functional. And that brings me to this point. Blockchain is going to shape the future. Bitcoin will likely survive that transformation. Digital assets will continue to evolve, but storing all of your wealth in Bitcoin, that is not conviction, that is not innovation, that is not freedom. There are tons of arguments against this. What you are betting on is complete global collapse. Have there been times when empires have collapsed? Yes. Name a time in recent history, modern history, when there has been complete global financial collapse. Collapse. Not the financial crisis, collapse. Then ask yourself, if I'm the person holding this asset class, what it's worth in that scenario. Are you all of a sudden in some sort of utopia? Bitcoin is revolutionary. Blockchain is even more revolutionary. But revolution is not a retirement plan, folks. It is not an accumulation plan. It is an optionality hedge. It's a speculative sleeve. It's not a sovereign vault for your entire life savings, and I have seen people treat it this way. I've been in this business long enough to see the booms, the busts, the booms, the busts. I remember being in the Dominican Republic in like 2016 when it had just busted, or maybe it was 2017. There was a boom and then a bust. I remember 2020, boom, bust. I remember FTX, boom, bust. Everybody wants to map it out. Everybody wants to say it's for this reason or that reason. And each time there were people, real people, like your parents or your brother or your sister or you, real people that were forced to sell. Why? Because they're not deca millionaires and they got FOMO. And their $10,000 was turned into $3,000, or their $100,000 was turned into $30,000, or their $1 million was turned into $300,000. And they had no other money. The reason why it needs to be treated as a speculative sleeve, not a sovereign vault, is because you could be right. You could be right. The influencers don't care. You could be right if your conviction is that Bitcoin will hit 500,000 or a million or whatever. You could be right. But if you're wrong, you could lose everything. Now, I've spent 60,000 hours with real families. Real families can't afford to lose everything. That was a long video. If you're still here, God bless you. I've looked at this up, down, sideways, and in circles, and I didn't touch on 1/10 of what I wish I could have touched on. There's a heck of a lot more in my book, Inheritance, Blowing the Lid Off of Big Finance, coming out June 10th of 2026. Pick up a copy. My intention there is to bring all of the half-truths to full truths, to give you what you deserve to know, because for every ultra-rich dude hanging out in Beverly Hills, there are literally millions of families like mine that need to know the truth. Like, share, subscribe. This is not to monetize a damn thing. It's to help people prevent what happened to my family. Because not everybody else is somehow able to turn what happened to their family into 4 successful companies. And I thank God every day that I was able to dig ourselves out of that mess. Be good to each other. Speak truth.